Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the latest stock market news updates that you need to know as an investor. So for more videos just like this one, don't forget to go and annihilate that like button right now, subscribe if you are new, go ahead and become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube, and with that being said, let's get right into today's stories. Starting off, let's look at the market today. We see the Nasdaq and the S&P 500 doing relatively well. However, we see Tesla shares down massively, and we're going to talk about that in this video. Although the stock market had a bumpy start to the beginning of 2024, it seems that the S&P 500 and the Nasdaq are doing quite well, to where the S&P 500 is staring down a new record. Now, on the flip side, we also see Bitcoin being very volatile today, as well as Tesla. Tesla, if you didn't know, is an electric vehicle company, but they also do much more than that because they are also involved in energy storage as well as energy generation. Now, what's interesting about this company is that they have had a flurry of bad headlines lately, to where the EV maker lost more than $94 billion in stock market value so far in 2024, even though the year relatively just started. So it's not the best year for this company, and it's actually been their worst year to date as a public company for Tesla. So I say let's dive further into that story. So let's talk about if Tesla stock is a buy right now and why it is dropping in their share price so dramatically. But let's start off with some good news. Last year we saw Tesla, ticker symbol TSLA, show again why it's such a favorite stock among so many investors, as the stock price soared 102%. Investors are now wondering if it's too late to pick up shares of this company, because after all, Tesla has produced a remarkable return of 2,280% just in the last decade. Now, here's the problem. Should investors buy right now into this company despite macroeconomic problems? Well, let's talk about it. Higher interest rates and inflationary pressure have negatively impacted many businesses as well as many consumers and their ability to buy products. And because of this, Elon Musk actually decided to lower the prices of a plethora of his electric vehicles. So they had multiple price cuts last year so that it could increase the demand for people buying his electric vehicles. However, some investors didn't like that Elon Musk was lowering the prices of his vehicles because this negatively impacted his margins and profit that he was getting per vehicle, which negatively impacted his financial numbers. And to make things even worse, the business is registering a dramatic slowdown in growth right now. But it's not all bad news. Despite these recent headwinds and negativity in the news outlets, if you zoom out and focus on the bigger picture of this company, you're not going to struggle to find a multitude of reasons to love Tesla. I want to highlight Tesla's competitive advantages that they have right now, and that's why I'm a shareholder of this company. So let's start off talking about their economic moat. Their economic moat protects them against competition and against other electric vehicle rivals, because Tesla, after all, is a market leader in the EV space. I like this company due to their long-term ambitions because they like to focus on self-driving capabilities as well as artificial intelligence. And the best part about this is that they are a market leader. I personally believe that they will be the #1 most valued company that is publicly traded in the entire world. And I think Elon Musk knows that this is coming for Tesla. Musk could also realize his goals of artificial intelligence and self-driving capabilities a lot sooner than a lot of people anticipate, because once he releases his global fleet of robo-taxis, you're going to see Tesla's share price absolutely skyrocket. So to accumulate shares right now may be the best idea. Once Elon Musk launches his fleet of robo-taxis, this is going to generate massive amounts of revenue and earnings down the line. But before they do that, they first need to perfect their self-driving capabilities and artificial intelligence, and it's only a matter of time before Elon Musk and his engineers crack this code. So when we take into consideration their amazing economic moat, their technological advantage, the fact that they're a market leader, and their robo-taxi fleet, this company is absolutely amazing. So investors need to consider the current price that they are buying this company at, and that's why we would look at their PE ratio. As of right now, their PE ratio, which is their price to earnings ratio, or PE multiple, is around 75. And this is very, very expensive. It's particularly expensive for a company that's trading at $733 billion for their market capitalization. However, with that being said, due to their future growth trajectory, this company actually could look fairly valued. But with that being said, we also see other companies like BYD, NIO, and a few others giving Tesla major competition. But overall, I anticipate that Tesla will keep their market advantage and that they will be a phenomenal stock to hold in your portfolio. Just remember to practice proper risk management and buy this company on a weakness. The company has also dropped substantially, and they're trading at around $218. And honestly, I am buying this company right now because I love to invest into solid companies when they are downtrending. That's the opportunity that I take advantage of. So I would love to hear your thoughts down below about Tesla. Next, let's talk about Cathie Wood. And if you didn't know, Cathie Wood is a huge investor in Tesla, but she also loves Bitcoin, to where she believes that Bitcoin, which is the top #1 cryptocurrency, could soar by 3,000% more from their current share price. So let's talk about it. According to ARK Invest CEO Cathie Wood, she recently came out with a Bitcoin price target that goes as high as $1.5 million in 2030, meaning that Bitcoin's price could surge by nearly 3,000% from now until 2030, which is crazy. Clearly, at first glance, a $1.5 million price target for this company could strike some investors as outlandish, and it personally strikes me as outlandish. I do not buy this price target for Bitcoin that Cathie Wood has given us. However, she is partially right, and that's what we're going to talk about. Cathie Wood rightfully points out two key catalysts for Bitcoin's price skyrocketing, and I personally think it will skyrocket. However, I don't know how high it will go. The first key catalyst for this cryptocurrency has already happened, and that would be the new spot Bitcoin ETFs. ARK is one of the investment firms that received approval to issue a spot Bitcoin ETF to where investors don't have to directly buy Bitcoin and instead can invest into this ETF. This is very good for Bitcoin's price because it allows traditional investors to get into this cryptocurrency while this ETF tracks the price point of Bitcoin. We also see institutional investors such as pension funds and endowment funds flooding into Bitcoin right now to allocate around 1% of their portfolios to Bitcoin. And this could have enormous ramifications on Bitcoin's price. At the same time, we also see wealth managers and financial planners could also start advising their clients to consider adding Bitcoin to their portfolios, again, which would inflate the price of Bitcoin. Moreover, Bitcoin is an amazing investment, but we need to practice proper risk management. I personally would not over-allocate more than a 10% portfolio allocation to Bitcoin or any cryptocurrency, but I do want to be transparent with you that I myself do own Bitcoin in my portfolio. However, Bitcoin is not in any of my retirement portfolios. They are in other types of portfolios that are extremely risky, and that's what the portfolio is made for. I'm not going to gamble on Bitcoin or cryptocurrency by adding it or getting it anywhere near a retirement account. So the two key catalysts for Bitcoin is that regular traditional investors get to invest into Bitcoin through a spot Bitcoin ETF, and we also see smart money such as hedge funds, various types of wealth managers, and even financial advisors recommending it to their clients, and these are going to be phenomenal catalysts which could cause the share price to surge. Now, if you want more detail on this, ARK Invest's Big Ideas 2023 report actually lists 8 different use cases for Bitcoin, which could all individually act as some sort of catalyst because it adds to the utility of this cryptocurrency. However, I want to make you aware of 2 problems with this. Essentially, the SEC, which is the Securities and Exchange Commission, could decide to pull the rug on Bitcoin and cryptocurrencies at any moment. Now, I don't think that's actually going to happen, considering that they just approved a spot Bitcoin ETF, but you never know. Lastly, we don't know how long it's actually going to take for Bitcoin to reach $1 million, or if it will ever reach $1 million. Cryptocurrency is hyper volatile, and a lot of them will end up being worthless. So you really need to pay attention and educate yourself on blockchain technology and the utility that various cryptocurrencies offer. So I'd love to hear your thoughts about this story down below. Speaking about other stocks and news stories, we see Warren Buffett, who is the CEO of Berkshire Hathaway, who is an investment legend and a titan in the investment industry, recently pour more money into one of his favorite energy stocks, and that would be Occidental Petroleum, ticker symbol OXY. And this is starting to become one of his largest positions. The reason why we would want to pay attention to this is because we as retail investors would like to pay attention to what smart money is doing. The United States right now is producing over 13 million barrels of oil, and Occidental Petroleum happens to be one of the largest oil and natural gas producers in the United States. What I like about this company is that they are not reliant on foreign oil systems. For instance, under 20% of their petroleum products come from foreign soil, which is very good. I like how this company is centralized in the United States. We also know that Occidental Petroleum is trading at a very good price. For instance, their price to earnings ratio is just 12.5, which is half of the S&P 500, which is a stock market benchmark. So we're getting this company at a phenomenal price point. We also saw Occidental's management recently acquire a natural gas producer named Crown Rock for $12 billion, which is anticipated to add over $1 billion worth of free cash flow generation to Occidental, which is a phenomenal business move. Lastly, we also know that Warren Buffett likes to bet on companies with very prominent management teams that have a high return on capital to their shareholders. We also know that Warren Buffett likes to buy companies that have a good dividend payout and that they repurchase their shares. And if you didn't know, on an annualized basis, Occidental has a dividend yield of 1.5%. And this would be based off of their current share price of around $57. And all of this sounds great, but I don't want to lead you astray. It's not like this company is going to skyrocket in 2024. This is a very stable investment that should be a backbone to your portfolio. So don't anticipate crazy surges in their overall share price, but instead, slow and steady is going to win the race in regards to this company, especially if you have a long-term time horizon for an investment prospect. And that's why Occidental looks very promising. And that is another reason why legendary investor Warren Buffett is buying more of this company. In other news, we saw Apple, ticker symbol AAPL, which is offering a discount on their iPhones over in China. We see Apple reducing the price of their iPhone 15 by approximately $70 due to rising competition in the smartphone arena. And this is a little bit concerning considering that Apple has not reduced the prices of its iPhone in multiple years. But last week, it was reported that Apple's Chinese iPhone sales had dropped 30% in the first week of 2024, so to keep demand high, Apple decided to slash their price. And what's even more problematic is that the company saw a downgrade from Barclays amid concerns over its hardware business, including the iPhone 15. So, to see them decrease in demand for their iPhones, as well as a downgrade from a prominent analyst, this does not look good for Apple. However, Apple is still one of my all-time favorite technology companies, and the further it goes down in their share price, the more I'm going to buy into this company. Apple is facing fierce competition from Chinese rivals such as Huawei Technologies, to where Huawei clearly has the edge over in China, so I'm interested to see how Apple is anticipated to compete with this. In other news, we see a breakthrough in aviation and government contracting from an aerospace giant. We saw NASA and Lockheed Martin reveal their X-59 supersonic aircraft on Friday. And according to a NASA press release, they said this, and I quote, "Using this one-of-a-kind experimental plane, NASA aims to gather data that could revolutionize air travel, paving the way for a new generation of commercial aircraft that can travel faster than the speed of sound." End quote. We even heard Lockheed Martin comment on a Twitter post saying this, "This is the X-59, a single-seat X-plane aiming to reduce the sound of the sonic boom to a mere thump. It opens the possibility for commercial supersonic flights over land, which has been prohibited since 1973. But since this plane is trying to stop that supersonic boom, this will allow commercial aircrafts to fly at similar speeds, which will make you get to your destination faster." Further down in the article, we also see another press release from NASA that says, "This is a major accomplishment made possible only through the hard work and ingenuity from NASA and the entire X-59 team." It goes on to say, "In just a few short years, we've gone from an ambitious concept to reality. NASA's X-59 will help change the way we travel, bringing us closer together in much less time." End quote. So I think this is a very cool idea, and I'm excited to see what this means for the future of air travel. But Lockheed Martin is also in another news story because they secured a $271.29 million Missile Defense Agency contract, which is great news for this company. Ticker symbol LMT. They currently trade for $463, and I personally hold Lockheed in my portfolio. To add context to this award is not necessarily a new contract, but rather a modification of an existing contract, to where the original contract was worth $674.48 million, and now, due to this $271.86 million increase, it's worth around $946.33 million. So again, this is going to be another great growth catalyst for Lockheed Martin. And since we're in earnings season, we know a lot of companies are set to post earnings this week, so let's take a projection and a forecast regarding what is headed our way, starting off with Goldman Sachs, ticker symbol GS. Goldman Sachs is a very prominent financial institution, and they are set to release their quarterly results alongside Morgan Stanley before the opening bell on Tuesday. Analysts currently anticipate year-over-year growth in both earnings per share and revenue, so Wall Street analysts have a buy rating on this company. And I personally think Goldman Sachs and Morgan Stanley will both perform relatively well. And we also know that Goldman Sachs has beaten revenue expectations in 6 out of the last 8 quarters, although they have missed EPS estimates more than that, so we're just going to have to wait and see. Also, on Tuesday, we can see other companies also issuing earnings reports, such as Morgan Stanley, Interactive Brokers, Pinnacle Financial, Progress Software, and many others. We also see Alcoa, which is a Chinese aluminum company, also set to release earnings. And that would be on Wednesday. And if you didn't know, the stock has dropped more than 40% over the last 12 months. So this is catching the eye of investors. So analysts currently have a hold rating for this company. They're anticipated to bring in a loss of 85 cents per share and revenue of $2.58 billion. But on the same day, we also see other companies such as Charles Schwab, Citizens Financial Group, Prologis, Kinder Morgan, Discovery Financial Services, and a few others, which are also anticipated to release earnings on that same day, which was Wednesday. Now on Thursday, we see Taiwan Semiconductor Manufacturing, ticker symbol TSM, to where analysts anticipate a year-over-year decline in both top and bottom lines regarding their revenue, which is the top of the line, and their earnings, which is their bottom line. Now, despite this, they still have a strong buy rating according to professionals. TSM receives an A+ for profitability, but only a D+ for growth and a C+ for valuation. As of right now, the consensus estimates are that they are anticipated to bring in $1.35 for the quarter and $19.78 billion. But this company is known for beating earnings expectations and missing revenue estimates, so we're just going to have to see how well they perform. Other companies that are also anticipated to release earnings reports on that same day would include First Horizon, M&T Bank, Texas Capital, PPG Industries, and a few others. Lastly, on Friday, we see Schlumberger, ticker symbol SLB. This company could outperform due to economic conditions, according to recent analysts. They're anticipated to bring in an earnings per share estimate of 83 cents and $8.94 billion worth of revenue. And that would end our video for today. So for more videos just like this one on the latest stock news, go ahead and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.